Hello, good afternoon. Welcome to Funds for Change. Please join us in the circle stage and be seated. We will start after 30 seconds of introduction, just for people to get a seat. There are plenty of room here. So we have a very interesting program today. More than 2 hours of speeches, panels and the very famous now reverse speech session, where we will have 15 GPs, global GPs, that will join us on stage and deliver their pitch on their most brilliant ideas on impact investing. So a few words on me. So I'm Emmanuel Parmentier. I'm a managing partner at INDEFI. INDEFI is a strategy consulting firm. We work with asset managers, we work with asset owners on their strategic topics, projects. And I created 13 years ago, so in 2011, our sustainability or sustainable finance activity. So 28 consultants dedicated to help asset managers, asset owners on sustainability. But enough about me. I will be your MC for the first half of Funds for Change. And then my colleague, Imen Marzi, will be your MC for the reverse speech session. So let's start with the panels. And I invite on stage my two first panelists. So allow me a few words of introduction. So we have here Adeline Lemaire. Adeline, you work at Bpifrance. So for the international audience, it's the French public bank. And you are an executive director and head of funds investment.
That's right. Good afternoon.
Good afternoon. And Charlotte Virali, you work at SWEN Capital Partners, which is a pioneer private asset management platform dedicated to sustainable finance. And you are an investment director for an impact investment fund called SWIFT. Welcome,
yes.
Charlotte.
Good afternoon.
Good afternoon. All right, my first question is for you, Adeline. We will talk today about the difficulties for LPs to invest more in impact funds and the challenges faced by GPs to fundraise impact funds. So first question for you, Adeline, is at Bpifrance, how much do you invest in impact funds? How many do you have? What type of fund do you seek currently? And then we'll talk about the future.
Sure. We invest mostly into French funds, but also with an international angle. And we cover all strategies from seed to turnaround in VC and private equity small to lower mid-cap. So we have, over the years, heavily invested into impact investment funds, seen as such. And I'm happy to further discuss what that means, what that entails. But we don't have a specific allocation dedicated to impact investment funds. With the utmost respect for fellow LPs who work that way, I don't really see it working. If you have a minimum amount that you want to dedicate to impact funds, people might want to question whether the investment decisions were really taken on pure business terms, if you have a minimum to achieve. And then if you have a maximum, it can also be seen as a sort of philanthropy pocket that you absolutely do not want to take to a higher stage, and the rest of it is going to be performance-driven. The way we see impact investment funds are funds that have the same approach to financial and extra-financial performance. And well, happy to further discuss and see whether we share views on what that means, but it's a prerequisite for us.
All right. So you don't have a specific allocation for that, but you do track impact investment funds, right, in the portfolio. And can you just give us a sense of how many GPs or the amount, mostly French, from what I hear?
Mostly French, but also more and more international. We've invested, it's been, even before Bpifrance was created 11 years ago, we've supported the pioneers in impact investing, the likes of Citizen Capital, Altor Equity, Impact Partners. Some of them are here today. The way we saw it was for funds who, took to the same level financial and extra financial performance, aligned interest with a minimum of having 50% of the carried interest linked to extra financial performance, and of course, intentionality, measurement, and alignment. We talked about that. So those were really the main definitions. But then what we saw is the movement growing and growing, going from private equity to tech, and having more and more tech funds incorporating that impact investment approach. This is definitely a trend, and this is something that we want to keep on supporting. But beyond purely impact-focused funds, we also want to make sure that the market overall, even for funds who do not label themselves as impact-driven, integrate in the closest way possible impact values and the support to decarbonize the economy and integrate also climate change.
So how do you do that? How do you influence the ecosystem of generalist private asset funds toward more impact?
Well, it's both things, really. It's having stricter requirements when we invest, and it's also providing a lot of support, acting as an operating partner to the GPs that we work with. So we've provided a lot of support with publications, events, training sessions on how to integrate the climate approach at all the different stages of the investment process. And then there's what we require when we invest. When we invest into a fund now, for tech buyout funds and private equity funds, we require the GP to commit to, for whichever investment that they will be making, have a carbon footprint at the start when they invest into the company, measure it along the way, define a very clear net zero path for the portfolio company, align also the management package to the carbon indicators that will be set for the specific company, and of course to have the same type of measurement when they exit the company.
Okay, and do you feel it works? I mean, do you really see an
It's starting. Yeah. It's starting. It's starting. We have a lot of conversations with the funds. None of them now refuse to take on that commitment. I mean, that doesn't exist
never refuse
anymore.
Something from Bpifrance, right?
Some of them do, right? Now I've lost my thought, Emmanuel. No jokes on the panel. Yeah, so it is working. It is working. It is starting. It all depends, of course, on the size of the management company as well. And we do acknowledge that for smaller size GPs who do not have an ESG officer, who do not have the equipment that's necessary to professionally address this, it's still there's still some way to go.
All right. Let's move on to you, Charlotte. So could you first explain what is your investment strategy?
Yeah, sure. So our investment strategy is called SWEN Impact Fund for Transition, also well known by some of you with the nickname of SWIFT. And basically, our strategy is to invest mainly in the renewable gas sector, biomethane, hydrogen, and hydrogen derivatives, which can be basically clean fuels. And the rationale behind this is to invest in what we call the hard-to-abate sectors. So when you talk about the energy transition, the easier thing to do is to go for electrification when you can. So you electrify all usages that can be, but some of them can't. For instance, if you take large planes today, you cannot electrify them yet. Maybe in the future, you don't know. So you have to go for sustainable fuels. And in order to do that, you need to develop new products. And those new products, such as sustainable aviation fuels, for instance, they usually derive from clean gas, such as hydrogen. So this is the rationale for this strategy that was created in 2019 by SWEN and was quite a pioneer strategy in that sector.
Can you tell us more about the first fundraising? So back in 2019, different period from now, right? But did you face some obstacles to convince LPs about your strategy?
Yeah, sure. So back in 2019, it was different times, of course, but we faced the problem of a first-time team, first-time fund,
Okay.
where it's always more difficult for those teams to get financing, even though they usually have very good performances when you look at statistics. Also, there was a bit of pedagogy to be done with the LPs, given that our strategy was quite a pioneer one. And biomethane, for instance, is not very well known by most of the LPs, and therefore we need to explain what it is for, and why we believe it's important to develop the technology. And for our second fund, we have increased or developed the strategy and included hydrogen as another type of renewable gas and hydrogen derivatives as part of the strategy.
All right. And so how did you differentiate yourself from the rest of the impact funds? Because I guess that from an LP perspective, there are plenty of impact investing strategies, and it can be very difficult to choose.
Sure, it can be difficult. I think we have both the advantage and disadvantage of being in quite a niche sector.
Yes.
It means we are specialists in what we do, which is very appreciated by the LPs. Mm-hmm. And we are a team of people who come mainly from the industry and therefore very much are into our products. At the same time, those are products that are not very well known, as I said, by the LPs, and therefore it needs a bit of pedagogy to explain what it is for and why it's useful and why it's important to do those investments besides investing in electricity renewable generation.
And so now that you have several years of history and background, so what type of performance indicator can you send to LPs explaining that it works, my strategy?
Yes, so now we have about 5 years of track record on our Fund 1. And we have 2 years in our Fund 2, and we can show to our LPs that the performance is there. Mm-hmm. Financial performance, but also impact performance is getting there and can be measured now. And this is very important because sometimes LPs have the impression that the fact that we are impact means there will be less financial return than for non-impact funds. Which,
and is it the case?
Well, it's not, and that's what we can prove thanks to our track record, which clearly is an advantage today.
Okay. What do you respond to that, Adeline, on the performance discussion? Do impact funds perform less, according to your stats?
No, it's really the key issue. I wouldn't say that. No, impact funds do not have a performance that is less performing than other funds when you compare segment by segment. So I think actually what we need is to look, I think, the other way around. It's like extra financial performance is supposed to bring added value and an increased financial performance. So to really make the case to mobilize more LP investments and have them flowing into impact-driven funds, I think GPs really now need to make the case and show data that proves that the impact approach has been a value driver and has created, in the end, an increased financial performance, both for the companies, its employees, and the GP, and of course the LPs in the way. That is what is going to drive more and more LP interest into this thesis.
Okay, and do you think that the GPs are delivering this, so this type of measurement on interwoven impact and financial performance, or at the moment it's still lacking some good examples?
Yes, no, more and more so. I think what we've been lacking for the time being is a statistical depth and historical perspective. But now it's been more than 15 years since we've had impact investment funds, at least here in France. So we're able now to prove that along several cycles. So.
Okay. And so do you expect on the pure impact performance now, let's setting apart the financial performance, do you ask for specific KPIs or specific reporting for these impact funds to prove their their impact strategy, and how do you, consolidate that? Is it possible, or do they all have a different, set of KPIs?
Yeah, I think I've been in impact investment in emerging markets and developed markets for a long time now, and it's always been that dream to have a one-size-fits-all, to have, like that one indicator that could embrace what the whole market is doing. I'm not sure that is really going to happen. We can talk about impact IFRS or ESG IFRS. Those are interesting conversations to have. But as an LP, the way we approach it is that we reckon with the fact that each fund, because of its specificities, one is going to be more socially driven, one is going to be more environmental driven, and that's fine. I think we need all of that. But each of them is going to have its own methodology. As long as the methodology is professional, robust, proven by a third-party approach, that works for us. We have the capacity to accept that, and then to aggregate different indicators that will be coming out of those funds. But I don't think we want to enforce into the market one set of indicators that could work for everyone.
What about you, Charlotte? How do you prove your, impact strategy and that it works and you deliver this impact?
So our fund is dedicated to the energy transition and climate change. So the key metrics for us is the tons of CO2 avoided thanks to our investments. Obviously, we can monitor many other KPIs, and we do. However, we believe that what really makes sense in the end is an indicator that is pretty much universal across all our investments is this one, the ton of CO2 avoided per energy produced. However, obviously, you need to tailor-made a little bit that, depending on the company you are investing in, and you cannot, use that necessarily for everything.
All right. So we have 2 minutes left, more or less, 3. It's great that you bring forward very positive examples of an LP, a GP that have successfully invested in impact, raised an impact fund, but it's fair to say that in the market, it's not really what is happening right now. LPs have difficulties to, invest more in impact funds. GPs have difficulties to fundraise. So, any advice that you would give to the audience and call to action on how to successfully create a program or, strategy to invest more in impact funds? Maybe, Adeline, you want to start? Any advice for fellow LPs?
For fellow LPs?
Yeah.
I think it's really look at the performance. And then look at your DNA. I mean, different LPs might want to have a very specific approach because of who they are, because of their background, whether you're an institutional LP or whether you're a corporate. So really understand the needs of what you want strategically. You might be more climate focused. You might be more social inclusion focused. So know what you want, and then be very selective. Be very selective. And invest with the ones that are going to work. Yeah.
Okay. What about you? Do you have comments?
Yeah, I think in order to make impact, you need to invest in people who know what they are talking about. So I would say look at the strategy, of course, but look carefully at the team and why the team is here and what's the background of the team and its track record. Because you cannot achieve impact in a dedicated area with professionals that do not come from this dedicated area, I believe.
Okay, so the team, the intentionality, I guess, is a first criteria.
Exactly.
Should be, at least.
Should be.
Okay, any recommendation for GPs now to successfully fundraise? So what's the secret recipe to achieve a fundraising of an impact fund?
Yeah, well, don't be afraid to very clearly explain your strategy, your intentions, and also I would say be clear on what your targets are and how you're going to measure them. We're back to KPIs. If you swamp LPs with so many KPIs that at the end of the day they don't understand what's happening, it won't help. I think it's better to focus on one criteria, one goal, and achieve it.
All right. Adeline, last word for a piece of advice for GPs.
I think make your case, make your impact case, make your business case, performance-wise. But then that would be the same advice that I would give to non-impact investment funds. In this fundraising environment, diversify your LP base. Go abroad, chase international LPs, chase different types of LPs, corporate, families, just, expand your horizons.
Thank you, both of you. I think we're perfect on timing, right?
Thank you, Emmanuel.
You will be there, I guess, just after for the networking part. So for the audience, you can ask your question directly. Thank you, Charlotte.
See you later.
Thank you, Adeline. So we've seen two very good examples of, positive examples of an LP and a GP having successfully invested in impact funds. But as I was just mentioning before, it's not the usual case. Okay, for the UGP in the room, I guess that you find it very hard to fundraise your impact funds. And for you LPs, maybe you want to invest more, but it seems that there are a lot of barriers that prevent you to invest in impact funds. So we'd like to spend the next 10 or 12 minutes on a keynote explaining the why. Okay, what are the obstacles that prevent LP to invest more in impact funds and how we can overcome them. And I would like to welcome on stage our next speaker, so Joanna Koczuk. Please, Joanna. All right, so Joanna, after a career at Schroeder, right, you joined Ox Venture 18 months ago, and you've dedicated the last 18 months to meet with 200 or so LPs across the globe?
215, yeah.
250, whoa, okay, very impressive. So both North America, Europe, and a bit of the rest of the continent, right?
That's right, yes.
So we will definitely use this experience to highlight the topics of today, which is why LPs do not invest as they could, as they should, in terms of impact funds. But allow me, Joanna, to set the scene for a few minutes. So yes, it works. All right. So a few slides. Just in terms of context, probably all have experienced that fundraising is difficult. The stats also show that. In 2023, the number of funds and the amount and the volume of fundraising have decreased for the second year in a row. This is true for at global level, at continental level in France, and for all types of private asset classes, maybe except infrastructure. All right. So that's the economic context. But at the same time, science tells us that we are putting at risk our capacity to live on this planet. Okay? There are multiple ways to show that. You probably know these planetary boundaries. Okay? 9 planetary boundaries defined by academics. And they unfortunately tell us that 6 of them have been crossed. So we are really putting into danger the bare fact of living on this planet. And the LPs that I talk to know that. I mean, I don't really see any denial about the science behind this type of graph and explanation. But yet, there is a kind of disconnect. Okay? They know that they should, based on science, invest more in impact funds. It's direly needed. But on day-to-day allocation decision, it's not happening. So to target this problem, at INDEFI, we like to think at a system, use system-seeking approach to this. So we just analyze the investment value chain, which is quite complex. It's a complex system, so I'm sorry, it's a complex slide. Yeah. But you can see it afterwards. Just the main message is that you need to target every single stakeholders of the investment value chain. Financial institution, so Bpifrance was a good example. Family offices, asset manager, private asset manager, M&A, trade association, companies, and for every stakeholders we have, sorry to tell, a project to be made to push them forward, more investment in solutions. And so based on that, all the 13 years of experience, we do feel the frustration of the people working within LP's organization on this very topic of why don't we invest more in impact. And sticking with this system thinking approach, we can see the problem as an iceberg. Okay, there is the tip of the iceberg, 10% below the above the surface, sorry. And that's the usual discussion, oh, we don't invest in impact fund because they are too small and not performing well. So the reaction to that would be, next time I will bring to you a bigger fund with a better financial performance. But that wouldn't really address all the structural reasons that are below the surface, and that we simplified here today into three segments, three topics: structure, people, and process. So I will do the first one, and Joanna will highlight people and process, right? So on structure, the topic of allocation, okay, is a very good one. Adeline told us just before at Bpifrance that they don't have a specific target allocation to impact. Some other LPs use that. And why do they create this impact allocation strategy? Because they find that it's easier to conceive this asset allocation once and for all, and then the day-to-day decision at investment committee is much easier. And we've helped many insurance companies create what they call a green asset sleeve or impact investment sleeve. There are many names. You can also use the SFDR definition of sustainable assets. And it's not small, huh? It's a fairly big amount, between 10 and 20%, up to 20% of their allocation dedicated to impact strategies. It can be liquid, okay? Green bonds is an example, and obviously private assets. On the performance, there is this discussion on what is the good measure of performance, financial performance for an impact fund. Okay, with family offices that have more liberty to define their frameworks of investment as they want, we try to go away from a mono dimension of performance, which would be IRR, and to create a bi-dimension space. So IRR on the one hand and impact performance. And if you look at the investment opportunities with this matrix, it opens room for many interesting opportunities to invest in impact funds. But so that's for family offices. Obviously, institutional LPs have more constraints in terms of performance and how they measure it. It's real structural barriers, but it's also mental barriers, which is a good transition to people. And Joanna, can you tell us about that?
Great. Thank you, Emmanuel. I've reflected in the last 18 months across the multiple conversations I've had with all different kinds of LPs, family office, corporates, different types of institutional investors. And in doing so, I was really looking for what is the red thread that enables LPs to invest in impact and allocate to this space at scale. And this one red thread that clearly came out from that study was really executing change management internally and doing so very well. You can tell by my accent I'm American. At least on this side of the Atlantic, when I've met with investors, I don't find that there's a lack of buy-in and a lack of conviction in the importance and the role that impact plays within LP portfolios. It really comes down to the execution risk of doing so and the real barriers to entry that allocators face when they are inheriting legacies in organizations where there's lack of resources, where there's time constraints, bandwidth issues, where you have quite complex stakeholder management, decision-making processes. And I think the real collaborative opportunity at a conference like this is LPs and GPs partnering together to overcome those barriers to entry and really divert more capital into this quite critical space. And that's something time and time again in private markets. Let's take 5 years ago. I remember during my time and tenure at Schroders, we faced huge barriers to entry actually when we spoke with investors who didn't want to allocate to private markets, who said it was too risky, it was too illiquid. And what's really interesting, in the course of 5 years, a lot of those allocations previously sat at 5 to 10%, and they're now at 50. And I'm seeing very, very similar growing pains happening in the impact space at the moment. And I think we're at this really interesting inflection point where a lot of the building blocks investment-wise that we've put in place need to be challenged a little bit. I think the way that we think about risk How do we measure that? How do we look at relative performance? How do we look at generating alpha? Those were constructed with a very different set of asset classes in mind. And we're now, again, arriving at that transition point where is that going to effectively allow us to scrutinize, evaluate, and make allocations into the impact space? And more importantly, if we're so focused on providing that high level of rigor and scrutiny when it comes to performance, when it comes to the sort of professionalism of the team, are we doing that just in the impact asset class, or are we applying that across the board to all of our asset classes? I mean, a great example of this, and I'll try to be a bit spicy here and wake up the room a little bit, I had an LP say to me, well, we have several more processes for impact, and it's a longer decision-making process. We really need to double down and make sure that they can deliver. And I said, well, was that same process applied in the venture capital space just 2 years ago when I saw rounds close in 24 hours without so much of a one-page term sheet, and now the industry is facing the consequences of that as a whole. So if we're going to talk about financial performance rigor, risk rigor, assessment rigor, let's not just silo that towards impact, but let's actually look at our entire private markets and public markets portfolio with that same lens. And that's a really, really critical component that I'm seeing emerging from a lot of these conversations, and just challenging one another to be able to rethink a little bit of that criteria. And on the GP side, recognizing that we can do something, you can work with LPs to scale those high walls in the same way that we did for private markets, in the same way that we did for a number of asset classes that only a couple years ago were considered opportunistic, periphery. Only if we have leftover allocation will we allocate to that, and now they've become very much a core part of that portfolio. So I think change management is one massive risk and obstacle that we've identified. I think the second one that I want to highlight, and some of the other panelists talked about this, is complexity. And when I talk about complexity, I don't mean hearing from investors, well, I don't understand impact, so I'm not going to invest in it. I actually think it doesn't really come down to that. It's the vernacular and the language of impact has evolved so rapidly over the last couple of years. Sectors have now expanded to subsectors and subsectors, and for LPs whose full-time job and commitment isn't to focus on impact, much less private markets, or in many cases with some smaller LP organizations, they have allocation responsibilities for all of private markets and public markets. It's imperative on us collectively to be able to demystify and debunk and sort of clear the very muddied waters of language in this space that often gets misused, greenwashed, and sort of changed in and out at will. And where we can provide that clarity around what we're targeting in the investable universe, what problem statement are we solving, how does this actually comment on long-term structural trends, we can clear that air a little bit and breathe some clarity into that process. I think we're going to find that the steps to get to investment committee and assist LPs in doing so will become a lot more tangible. And these obstacles are very much things that we can tackle going forward.
So Joanna, call to action now?
Yes. So I've partnered with ChangeNOW to launch a sort of a myth debunking series around inviting the audience at ChangeNOW to reflect on what misconceptions and myths have you heard about allocating to impact. If you take, well, hopefully you take away multiple things from this session, but if you only do one thing today, please go to the recent post on LinkedIn. I'd love to hear misconceptions or sort of myths you've heard about investing in this space, and an added incentive in doing so is if you leave a comment, the ChangeNOW team will be sending our official debunking of multiple traditional myths that we've heard associated with impact and providing you with tangible data to be able to take away and execute internally in your own investment committees.
Thank you, and thank you, Marie, that has pushed that forward. All right, as a conclusion, just 30 seconds, you're not in a rush. Yeah, I know we have 6 seconds late. It's okay, 7 seconds is okay. So we've seen that we need to reframe the problem, we need to work on empathy and people, on clarity and cooperation, and a nice call to action. And thank you, Joanna, and I will now move to the next section, which is another panel with Olivier and Kevin, and I please welcome them on stage. All right, so allow me to introduce both of you. So Olivier, you also work at SWEN Capital Partners, like Charlotte a few minutes ago, but for another impact investing strategy, Blue Ocean investment strategy. And Kevin, I guess that everybody here knows you, but still, I have to introduce to you, you're the co-founder of ChangeNOW. Topic today for the 8 coming minutes is collaboration, all right? But let me start with you, Olivier. Can you tell us briefly what is your investment strategy? And I know that you have an announcement to make, so be my guest.
Yes, thank you, Emmanuel. So Blue Ocean is SWEN's capital partner, a venture capital fund to regenerate ocean biodiversity. So we are designed to deliver both systemic impact and financial performance by investing in startups that are bringing solutions to the 3 main threats to our ocean: overfishing, marine pollution, climate change. So we raised 170 million euros. The fund was launched in July 2021 in scientific partnership with Bpifrance. And so far we have made 14 investments. And we're investing mainly on Series A and with a core focus on Europe.
All right.
So
and so what's next? You invested a lot. Please tell us.
Exactly. And so that's a very special moment because just after Christian Lim, my co-founder, and myself, we started working on this strategy. We met with Kevin and Santiago. And very quickly, that was back in 2018, and very quickly we thought that ChangeNOW was a great place and a lot of common values. So we've been partnering since then. And so for me, it's a very special moment to be able to announce here at ChangeNOW for the first time that we're raising Fund 2 of Blue Ocean, and we're going to target 300 million euros.
Okay, impressive. Congrats. Good luck. So precisely, can you go back to the first fundraising experience? What were the obstacles? What is your reaction to the keynote that we just gave, and what are you doing differently this time?
So first, I would argue that a lot of LPs, at least in Europe, they want to invest in impact. And you mentioned that. I mean, some LPs, they really want to invest, but they don't know how. But the main issue is that they don't like to invest in new strategies.
Yeah.
And of course, when you're launching a new strategy on impact, that's new. So you're a first-time fund with a new strategy, with a new team, and you need to build trust.
Yeah.
So
and at the time of your launch, you weren't part of SWEN, right? So you were on your own.
Yes, exactly. When we started, we were just Christian, Lim, and myself. We identified that the ocean was under threat and that innovation was a way to help address those threats. And we saw that there were absolutely no venture capital fund in the world working on that topic. So we decided to launch it. And we found very quickly that this was an ecosystem that was growing. There were a lot of opportunities, a very great pipeline. And we started to engage a number of LPs. And they were very interested in theory. But then they came back to their criteria, which is, OK, what is your track record? None. That's new. What did you build? How can you prove that it's going to work? And all this is very difficult. And that's difficult for all first-time funds, I think.
Absolutely.
But more specifically when it's a totally new strategy, because that's a new topic. So what is very important, we found, is to start building trust with the LPs. So how to do that? You can start working on some first investments, which we made before the fund, to start to generate a track record, demonstrate that there is a strategy, there is a way to invest on this. And second, very important, we joined SWEN Capital Partners because SWEN Capital Partners had already built that trust with an ecosystem of LPs. And joining SWEN to launch the fund, we were able to leverage on that trust to raise funds from the likes of Massif, Maïf, Groupe Arkea, etc.
Okay. And would you do things differently now for the fund too?
So that's Fund 2, so that's different. No longer a first-time fund. So we still do not tick all the boxes for some LPs because we started to invest in 14 companies. We built the team. We've been here for quite a long time now. We're well known. But we still have not exited from any company, so we cannot still demonstrate the performance on our exits. So we know that some LPs will ask for this, and that will not be okay for Fund 2. They will have to wait for Fund 3. But we will be
still an emerging manager, you know.
We're still. So we will leverage on existing LPs. They've proven that they were able to come for Fund 1, so we hope. And so far, they're quite happy, so we believe they will come for Fund 2. And we also know that there are a number of LPs that we've been talking with for 5 years now. They've not joined for Fund 1. It was too early for them. But now they're ready to come for Fund 2 because they saw how quickly we were able to deploy Fund 1. And they're confident that we will be doing the same with Fund 2.
Okay. Thank you. Moving to you, Kevin, on the topic of collaboration. So we see that, well, good example here. ChangeNOW is the place where Olivier decided to announce Fund 2 fundraising, and we'll see later many examples of how ChangeNOW has, you know, transformed or helped push forward some impact strategies. So can you explain what is the role of Fund for Change, ChangeNOW, to help the conversation between GPs and LPs on impact investing?
Yeah, I mean, I think that's what happened with Blue Ocean in 2018 is a really good example. When we started ChangeNOW, I never knew that we wouldn't actually be doing Fund for Change. It's actually something that came up when we actually understood that that was the kind of impact we could have, which was to facilitate the encounter and the investment of a LP into a GP. That was the example we saw with Blue Ocean in 2018. That was the second edition of the ChangeNOW Summit. And I think that, you know, when you look at systems change, I think a great way to have an impact and an influence on the system is to look at what is the role that you have in the system and who are the people that you have direct access to that you can potentially influence. And we understood that actually ChangeNOW, because of the format, you know, ChangeNOW, it's not an event, it's not a summit, it's a call to action. And the kind of people that you bring at ChangeNOW are not the kind of people you would find at the typical, you know, finance conference or a sustainability conference. You will find both actually communities here. You're going to find a ChangeNOW activists. You will find investors. You will find CEOs. You will find kids, athletes, artists, because everyone has a role to play in this transition. You know, we are all on this. We all have a role to play, and everyone will find something that caters to its own needs or interests. And I think that once you understand what is your role and who are the people you can influence, then you can actually work on those strengths. And because we understood that we had that power at ChangeNOW, we had that possibility to drive more capital in the ecosystem and in the impact investment space, we decided to create Funds for Change and push to have impact investors raise more funds because we need more capital in the space. And we know that at ChangeNOW we're able to attract, you know, non-traditional impact investors. As I said, you know, we had like this year more than 2,000 C-level executives coming, more than 1,200 investors. Yesterday we launched a program for board members as well, and they still came. And we think that the variety of people, of backgrounds that are in the rooms can positively impact the investment space and the GPs that are in the room. So that's, I think, one of the key elements that you know, makes Funds for Change a success is that the crowd is different, but it broadens the view of a lot of stakeholders.
Okay, today is the third day of ChangeNOW, so this evening it will be over. You can rest. But what can we do until next year? Because let's not wait a full year to you know, act after ChangeNOW. So any call to action or recommendation that all the people here can bring back at their office starting tomorrow?
I think we need to work throughout the year. I mean, we're seeing that the ESG space right now is going through a rough phase. There's more and more green blaming. There's more and more, you know, backpedaling when it comes to, you know, climate pledges in financial institutions. And I think private markets are a great place to find the answers and to mobilize capital. And that's why I really believe that we need to push to bring more capital into the impact investment space, and we have to create those conversations throughout the year on topics that are close to the hearts of the investors. People react to change in correspondence to how this change is affecting their lives. You need to make it personal to an investor. You need to come to an investor and talk about a topic that is going to speak to him personally, That's why we play so much with emotions. All our decisions are made out of emotions. So what we're going to do during the year is that we're going to have an approach that is more thematic based. So we're going to push to mobilize resources around the topic by the end of the year, which is called land preservation, land restoration. We need to restore more than 1.5 acres of land by 2030 to achieve land degradation neutrality. This is an important topic. People don't know about it. We're going to push. There is an important event at the end of the year called COP16 in Riyadh, and we're going to help them mobilize resources. We're going to have another event next year, which is the UN Convention for the Oceans. We're going to push the ocean agenda as well. So that's the approach, is to create platforms and events that are more thematic based as well, so that investors that feel really concerned about that particular thematic feel feel more interested and want to be part of it.
Thank you, Kevin. Thank you, Olivier. And please help me thank them.
Thank you.
All right, we are reaching the middle of Funds for Change, and now we're switching to the next part, which is the reverse pitch the reverse pitch showcase, I would say. So out of more than 100 funds, 15 were selected and will bring their best impact investing ideas. So there is a very, very short break of, organizing the stage. So please stay here, and we'll begin the reverse pitch in, 3 to 4 minutes. Thank you.